After the break, Gerald Celente on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, which you can find online at trendsresearch.com. Gerald speaking to us from Kingston, New York. Welcome to This Week in Money, Gerald.
Oh, thanks for having me on.
Well, talk about trends. We have a lot to talk about today. First of all, let's hit off with our big buddies, gold and silver. What's the long-term outlook there?
Well, as part of the Trends Journal, that's a quarterly, we send out a Trends Monthly. And a few days ago, the Trends Monthly went out, and I did a piece on gold. And the point that I keep making is that the reason why the equity markets are doing what they're doing, as most people know, is because of all the money being juiced into it, the quantitative easing. And now we just heard from the Bank of Japan that's going to send in nearly $800 billion into their failed economy already because Abenomics has not been working. And their largest pension fund announced that, and the pension fund, by the way, is about $1.4 trillion. It's the largest in the world. They're going to be buying stock at a much higher rate, not only in Japan, but internationally. So you saw the boost go up. So what's happening is the markets are going up, the equity markets are flying high, and then you look at the latest forecasts coming out of Europe, Germany even, and it's recession or going into one. So this is an artificial market that it's bearish for gold as long as the equity markets keep booming the way they are. And until this Ponzi scheme ends. And you're seeing the same thing happening in China. Their central bank also announced that they're pushing in more funds. You're looking at housing prices in China. They were up, about 27% in 2013. They're already down over 10%. So that housing bubble is bursting. So what we're looking at is as long as the central banks keep dumping dough in and pumping up the equity markets, it's going to be bearish for gold. And on that trend alert, by the way, that the Trends Monthly that we sent out a few days ago, what I mentioned was that I can see a downside of gold going to, another $100, $150, and that was when gold was a little over $1,200. And I can see that happening. But in the long term, I make it very clear, gold is for my golden years. I've been buying gold since 1978. My first buy was $187.50 an ounce. Now is, even it's worse. We're talking about 1,180, 87. And so you look at, the rise since then and look at the devaluation of the dollar since that time. So for me, gold is a long-term play. And it's very important to note that, coincidentally, the Bank of Japan raised its enormous amount of quantitative easing, and their pension fund went into a stock buying spree as they cut back on bonds, as the pension fund cut back on bonds, but the Japanese government, the Bank of Japan, bought bonds. But they did all of this just 2 days after the Fed announces the end of quantitative easing. Coincidence? Happy Halloween. Trick or treat.
I was just going to ask about that. What a coincidence.
It's no coincidence. It's picking up the papers every day virtually and seeing how the game is rigged, whether it's the probes going into looking at Forex or LIBOR or rigging the stock market with their high-frequency trading that's getting the information before anyone else is getting it, or looking at all the criminal acts that have been committed by the banks. It's no coincidence. They're all in collusion. And now, by the way, the European Central Bank is also talking about their definition and what they're going to do to juice that flagging economy as well. They call it a deflationary economy. A German bank announced this week that if you put in, if you're a business or individual and have over 500,000 euros in your account, negative interest rate at 0.25%, which means in real language, you have to pay the bank that much on your dough for them to hold it. Oh yeah, there's a recovery, I tell you.
That's really going to encourage saving, won't it?
Well, that's it. All this is doing, it's encouraging speculation. It encourages the merger and acquisition crowd, and it encourages the buyback of stocks that companies have been doing because of the record low interest rates. And interest rates in the U.S. have not been raised since 2006.
So how is this going to influence the long-term outlook on gold and silver?
Again, it's going to influence it when the Ponzi scheme ends, because all of this, like I said, they have interest rates are at record lows in most of the Western countries, and what they're doing is they're allowing all of this merger and acquisition activity and stock buying programs to continue. When interest rates go up, the Ponzi scheme is over, and you're going to see the shutters close on the equity markets. Then they're going to come up with another round of easing that'll be greater than the one that they have. That's when we're forecasting gold prices will go back up. But panic has to hit first, and it won't hit until they have to do something to come out with a new line of how they're going to juice the economy with more fake money. As I look at it, in the story we did in the Trends Monthly, bucks, bitcoins, or gold. And when you look at bitcoins, where they're about $350, a year ago they were what? Over 1,100. The dollar, the dollar's doing better than it has, since the panic of '08, when it was almost hitting $1.50 to the euro, and now it's around $1.25. And gold is down from its highs. But why would I want to invest in bitcoins, bucks, or any fiat currency when I know what the Ponzi scheme is? So I'm in it for the long term. And again, I don't see gold going back up until there's a financial crisis and they have to put more liquidity into the marketplace in the States.
Oil and natural gas, what's the trend there?
Again, that's telling you where the markets are going. I mean, you're looking at, Brent crude, going under $85 a barrel. It's down to 25-year lows in West Texas as well, hitting 79. These are 25% lows just since June. That's telling you where the global economy is. Yes, there is more supply, undoubtedly, but demand is way down, particularly in Europe. Oh, and then those brilliant geopolitic, mindful people that run our governments, they put sanctions on Russia. Perfect. Put sanctions on Russia at a time when the economies in Europe are softening. Brilliant strategy. So now you're looking at trade slowing down in Germany, in Europe, and in Russia. So what it's doing, it's depressing the prices even more. And then you have major suppliers like Saudi Arabia and others that are lowering their prices, trying to push the other people out of the market. So this is, to me, more of a demand than a supply issue. Again, supply is up undoubtedly, but demand is down. Oil prices, to me, are telling the future, and the future is the economy is soft.
The Dow and the S&P 500, what's happening there?
Again, it's speculation because of all the cheap dough flowing in and the ability to borrow money cheaply. You're looking at the Fed is holding interest rates near zero, and the big borrowers are borrowing very cheaply, buying up their stock. Again, I'm not making this stuff up. You look at the numbers on mergers and acquisitions for the first half of 2014, they're back to 2007 levels and above. So the equity markets will continue to rise as long as there's cheap money to fuel them until a crisis hits.
Some have predicted perhaps that'll stretch out for about 6 months. Then after that, maybe 6 years of doom and gloom.
You never know. Timing is very difficult in this business. And that has been, when I thought the things would collapse in 2010. I didn't know they'd come up with a term called quantitative easing and get away with it. I never dreamt that they would keep interest rates low for over 8 years. And I would never dream today that the Bank of Japan, after having a failure right in front of them with Abenomics, would double up on it. And when you look at, by the way, what they're doing and the amount of quantitative easing, compare their economy to the United States economy, their quantitative easing is 4 times greater. And then again, with the pension fund buying up global stocks, that'll boost the markets. The other thing, the wild cards that nobody can predict. And a wild card to look for is a terror strike, false flag or real. The United States and NATO are expanding their reach into Syria now. They've declared war against Syria. They're bombing a foreign country. How many people are they going to kill before the people are going to get even in the countries that they've attacked? And, as we used to say in the Bronx, payback's a bitch. How many millions, they beheaded, look at these ISIS, they beheaded people. NATO has killed over 1 million people in Iraq and Afghanistan. You think there are a lot of angry people that have seen their lives destroyed, their country destroyed, and their futures destroyed? So something like that could really rattle the markets. A 9/11 magnitude strike will bring this phony market back down to its levels where it should be. And then you'll see gold prices take off.
What's happening with real estate and China?
The boom is busted, and now you're also looking about the all that hot money and that shadow banking going on in China and around the world. They're starting to cut back on it, and again, you're seeing the Chinese real estate market from being up nearly over 27% in 2013, being down 10% or more already this year. So what's going on in China? They're buying up the world. Look what's going on. The first trip that the new president of Afghanistan made was to China. So America and Canada and the rest of the allies blow up the joint, and China goes in and builds it up. There's China boomtowns all over the world because the smart money's leaving over there that made the big money, and they're buying up around the world. So that's what's going on. They cannot sustain the Chinese 25% of China's GDP or thereabouts, maybe even higher, is pegged to real estate. That's enormous. So as that real estate market declines, so too does the Chinese economy.
Your latest Trends Journal has an inspirational video. Can you maybe tell us about how to skip old age, the boomer renaissance, and so on?
That's my favorite video we've ever done. It's on June and Stanley Blum. They're 95 years old, and they're real inspiration. Stanley's just completed his 4th book. He began painting at 80. He used to be a shoe salesman. He said he was a slow learner. And his artwork is terrific. His latest book is called A Roll in the Hay. And wonderful poetry and beautiful inspiration, both people. And they live in Rhinebeck, which is about a half hour from Colonial Kingston. They drive over here. And I'll pick them up. We'll go out to dinner. We won't get back until 11 o'clock at night. And June, who's a psychologist, said, we're skipping old age. She said, yeah, you slow down. Your mobility isn't what it used to be. But you keep learning more and doing more and growing as you get older. You've been around long enough to know what the score is. So you keep growing and living a life that you should aspire to rather than retiring in more ways than one, retiring mentally as well. So they just keep learning and growing, and it's there for anybody to watch, by the way. All they have to go to is to go to our trendsresearch.com or trendsjournal.com. Go to the conferences, and we had them at our latest conference over here, and you can watch the video. Very inspiring. So don't retire, just rejuvenate. And as the baby boomers keep, we're hitting those ages now where we're getting retirement, they're just pushing through and creating more. And that's really the message. No time to stop. You want to live before you die.
And with the baby boomers hitting retirement age, I said they're not all going to instantly become Frank Sinatra fans if they weren't before. They're still going to be listening to Led Zeppelin, for God's sakes.
Yeah, and maybe creating something new as well. And one of the trends we're going to be coming up with 2015, by the way, is we're not going to call it nostalgia, but it's something else going back to bring back higher quality in many different fields. So, and music being one of those, unless, rap isn't music. You can call it what you want. There are no instruments in it. You could call it poetry, but you don't have to know how to play a great violin, piano, trumpet, or anything else to do rap. And the food as well. The biggest trends that we see, the big money-making trends that we see, by the way, are going to be in food, clean food, and clean water. You may have rain up there, but it's dry in a lot of other places, from Brazil to California to around the world. and high-quality food is getting harder and harder to come by. So as the baby boomers age and quality goes up in their minds, the market for quality grows with it.
And besides, when you get older, you appreciate things that last. If you've lasted that long, why can't your products?
Exactly. And again, my father, may his soul rest in peace, we'd be eating dinner when I was a young guy, and he'd look at me and he'd say, son, they say that youth is wasted on the young. And then he'd take a couple more bites and he'd look at me again and he'd point his finger at me. He said, they were talking about you.
And of course, now we have medications that can perk up your older age.
Well, you could do that or you could do it natural, But really, as you get older, you learn more if you keep learning. And again, at one time in civilization, they used to honor the ancestors for what they knew and what they bring and what they gave. And we've kind of lost that now, particularly in Western civilization. So you honored the ancestors because they've been around longer than you and they knew a lot more, and you learned from them if you're open to learning. So June and Stanley Blum are really, to me, inspirations to learn from.
Gerald, always a great time talking to you. How can people find out more about Trends Research?
Trendsresearch.com, trendsresearch.com. We have the Trends Journal Quarterly, Trends Journal Monthly, and every weekday we do Trends in the News, the real news to put you ahead of the news and on top of the trends.
Gerald, we'll be chatting with you soon. Thanks a lot for being on This Week in Money.